Welcome to Businessline. I'm Pranav Bakshi. Our top story. It's raining mobile phones this festive season, with new models walking the ramp every day. And now we have another player testing Indian waters. China-based Coolpad Communications will be retailing smartphones in India. They've partnered with Reliance Web Store for this deal.
Another new kid on the block. Coolpad Communications, a subsidiary of Hong Kong-based China Wireless Technologies, has partnered with Reliance Web Store to launch a new range of dual SIM smartphones, the Coolpad 2938. Over the next 3 years, Coolpad will be investing 400 crores in the Indian market, 10% of which will be for the Tamil Nadu circle.
Reliance Web Store's agreement tie-up with Coolpad is part of the company's retail expansion plans. Reliance Web Store is exploring multiple revenue streams, and this diversification into the open market handset retailing is a best fit strategy for us.
This is Coolpad Communications' first overseas venture. The company will be retailing its smartphones in around 700 Indian cities, selling phones that begin from 11,000 rupees. Studies say that India has around 19 million users who have 2 or more handsets, a strong incentive for companies like Coolpad to aggressively push their dual-mode phones.
This is the business model that we have followed in China and worked for us very well, where we work with the telecom operator, specifically a telecom operator that has both services, GSM and CDMA at the same time, and we sell through their outlets, which cater for the high-end segment of the consumers. So here in India, RWS, Reliance Web Stores and Reliance Mobile Stores have more than 2,300 outlets in all of the 700 cities, and they cater to the top 2 to 5% of the Reliance CDMA and GSM subscribers.
The focus is always on the end consumer. Analysts predict that India's current tele-density of 40% is only heading north. And companies like Coolpad Communications will try and put their best foot forward to get a slice of the pie.
Coolpad will be coming out with 4 new models by the end of this year. Moving on, Azim Premji is now putting his bet on his consumer business and acquisitions. Here's the report.
This is what Wipro originally started out as, a sunflower edible oil maker. And now the very same business, FMCG, is back on Azim Premji's radar once again. And he wants this business to double its sales every 3 years, and its non-IT business to contribute for a quarter of the group's turnover, from just 15% now. That too at a time when software services business is facing a downturn.
FMCG is a very lucrative business, and FMCG is a business where you can look for, look at it from a very, you can take a very long-term perspective, and where the return ratios are also very high as compared to other businesses. So if you are getting high returns for your investments going forward and a stable business, you would like to invest into it. Yeah.
No wonder even after buying Unza 2 years ago, it now wants to acquire brands like Yardley and Tura from UK-based Laundromat Group for over 500 crore rupees. And this will make Wipro the country's 3rd largest personal care maker after Hindustan Lever and Dabur, ahead of Marico and Dabur, which incidentally were also in the race for Laundromat's brands. But getting all these brands under one roof would be a challenge. Wipro already has presence in over 50 countries courtesy Unza, but with Yardley under its fold, you can also expect Wipro to grow, not only in these 50 countries, but now in most countries globally. In Mumbai, with Sagar Malviya, Promit Mukherjee for NDTV Profit.
Now let's take a look at the market updates.
The index of industrial production for August came in ahead of expectations, posting a 10.4% growth, giving rise to optimism about sustained recovery in the economy. The markets saw a burst of action ahead of Diwali, with the Sensex climbing above the 17,000 mark once again and Nifty vaulting above 5,100. The first set of result announcements for the September quarter showed companies returning to profit growth. Profits for the first 100 companies grew 19% year-on-year and sales were up by 4%. India Bulls Power, the latest IPO to hit the markets, closed with a total subscription of over 22 times the issue size. However, the retail portion was just about subscribed one time. India's largest software company, TCS, declared a 29.2% rise in net profits and a 9.5% growth in revenues for the September quarter. The company plans to hire 8,000 employees next quarter.
Stay tuned for a discussion on mutual funds with Aarti Krishnan, research head of Businessline newspaper.